Hi everyone, let's go over my bullish and bearish low time frame and micro Elliott Wave scenarios on Bitcoin. Starting with the low time frame bullish scenario, where we're then looking for a 1, 2 and then a bigger 3 towards the upside, where the wave 3 minimum target is the 1.618 over here at 28.9k. However, a wave 3 can be very much extended, and all the blue lines that you see on the chart over here can be wave 3 targets. So you at least expect the high of this wave 5 to be above the 31k high. However, if we then look more locally, if this is a potential wave 3 to the upside, what you prefer to see is eventually a structure that is going more and more parabolic towards the upside and volume following price towards the upside. So you want to see the volume going up. And that is a little bit of an issue at the moment, that if we look at the volume over here, we do have some peaks during the move up, that's nice, but the average volume over here is relatively low, also compared to the corrective structure of a wave 2. You can see here the corrective volume is, like, you could almost argue higher than this move towards the upside, which of course is not really bullish. It's not what you want to see in a wave 3 scenario. So hopefully soon in this particular scenario, the volume is going to kick in. Another thing that is very, very important, this price has to take this high, because in the bearish scenario that I'll show in a second, this over here could be the potential high of the bearish scenario for then a move towards the downside. So you really want to see this high taken as well. And another reason that this scenario is a little bit edgy is because this wave 2 bounced on the 0.886, and this is a rare target for a wave 2 and a common target for a wave B or a wave X, meaning that then the structure towards the upside is more like a wave C or a wave Y, for example. So this is something to take into account as well. If we're going to go to the low time frame bearish scenario, we're looking at that wave X or wave B hitting the 886, which is again a common target for an X or B, after which then the move to the upside is either a wave Y in then a 3-wave structure or a wave C in a 5-wave structure. Now, the most common target for both a wave C and a wave Y is between the 1 and the 1.236, taken from the low to the high to then the low over here. And the reason that an ABC is possible is because the low over here also hit the 0.9 Fibonacci, taken from the low to the high of wave A, which means that a regular flat is a possibility. And a regular flat is a 3, 3, and then a 5-wave move to the upside, where the most common target for a regular flat is also inside this area. Now, one could potentially stretch the wave C target a little bit higher towards more like the blue target box over here, which is sitting between 28.9k and 29.2k. The same accounts for a wave Y, because the wave Y rare target is the 1.618 over here, which is sitting inside the blue target box at a level of 29k. So yeah, if price is moving to the upside, one can argue that still, if price is at this target area, we still have the potential to move towards the downside. However, the moment that this target box is going to be broken with volume, because that's important, right? We want to see volume increase in a potential bullish structure. So if this target box over here would be broken with volume, then in my opinion, 31k is very likely to be the next target, if not a lot higher. Of course, I have more target boxes higher, but let's first wait and see what price is going to do more locally, right? If we then go to the micro scenarios and actually zoom into the structure, then the bullish scenario I have over here is that currently price is either already finished a wave 4 or is now finishing or soon to finish a potential wave 4 in the wide count. Because in this bullish scenario, we are looking at an impulsive structure from the low and then a wave 1, 2, 1, 2, then a bigger 3, 4, 5 to finish the green 3. And then range for the green 4 before then eventually a green 5 to the upside to finish the impulsive structure. Now, as you can see, if this is already a wave 3 of a bigger wave 3, we didn't get very high yet. So this might support more like a wave C structure and then a 3-3-5 wave move, then a bigger move towards 31k, because preferably if this is a very, very bullish scenario, you want to see this like wave 3 of a bigger wave 3 to be extended to higher prices. However, you never know how high this wave 5 might still go. So let's just wait and see. But as it stands now, if this is the wave 3 or this is the wave 4 of then already a bigger wave 3, how high will it go, right? That's the question. So in this particular scenario, we then have the 0.5 Fibonacci taken from the low of 2 to the high of this wave 3, which is a maximum target for a wave 4. Now, wicking below this level and then closing above the 0.5 is no problem for me. However, starting to close 30-minute, 1-hour candles below the 0.5 is definitely not a bullish sign, and currently I put the invalidation at about 27.3k, that if price is going to move to the downside, yeah, I'm favoring the bearish scenario, right? So in this scenario, you really want to see price moving to the upside with volume as well. It first has to break this target box, however, on the micro time frame, which is sitting between 28k and 28.2k, which it kind of hit. However, there's a couple of confluences that I'll show in a second that it didn't hit just yet. So that is very important for the more bullish scenario. And if we then go to that bearish scenario, I'd like to show you the confluences over here in a second, after mentioning that in this bearish scenario, a WXY over here is a potential scenario where we then have a 3 and then another 3-wave move to the upside, where the wave Y consists of a zigzag 5-3-5 wave structure. That is quite rare. I mean, not in a wave Y. A zigzag in a wave Y is perfectly fine. But the fact that a zigzag is going to the 1.618 target, taken from the low of X to the high of A to then the low of wave B, is a rare target for a zigzag, and you don't often see a zigzag reaching the 1.618. And if a zigzag is hitting the 1.618 target, one always have to think about a potential wave 3 scenario, which is why we got that bullish scenario where you can still expect potential upside, right? Now, another rare target for then a wave Y is the 1.618 taken from the low to the high of W to the low of wave X. So basically over here you have two rare targets, which of course does not very much like increase the probabilities of the scenario, but it is nonetheless a potential target for a wave Y after grabbing the liquidities over here at the highs at 28.3k for then at least this move to the downside. But then in my opinion, what is happening over here is very, very interesting. So if we then do look at the confluences over here and also the CVD in a second, then what you have going on, first of all, we have the confluence being the range. So the range over here, volume profile, as you can see, I took it from basically where we are now to the beginning of this range. In my opinion, it's this price area, right? So the value area high over here acted as resistance. Price moved to the downside, value area low eventually went above the point of control, backtest 1, backtest 2, moved to the upside of the range over here, value area high before then being rejected, moving to the downside again around that point of control. Another point of confluence inside this blue target box is a daily level, and the daily level is currently sitting at 28.070, but as you can see, at least on the Coinbase chart, it has not been hit. So that is actually quite interesting. And another thing is that if I pull a fib from the high to the low, and then I put on the golden pocket. A golden pocket is always an interesting area. It's the green lines over here, the 0.66 and the 0.618. And as you can see, price didn't hit the golden pocket. It actually got rejected at the 0.5 like area, I suppose. Over here, it was rejected nicely. Then it moved above to the value area high before then eventually moving down again. So we still have some interesting confluences in this area which are still untouched, so wouldn't be surprised if price might want to go back up and actually take some of these resistances over here. Besides, by the way, now that I remember, we also have a double top over here. So the line that I have on my chart is a double top. So we have a high over here and we have a high over here, and that is quite interesting. So we have a double top that if price moves to the upside, it could potentially take the liquidity above the double highs, hit the daily, hit the golden pocket before then potentially a continuation to the downside in then the bearish scenario. So let's then look at the CVD, because I can imagine, and I also got some messages of people maybe a bit confused as well as what is happening. And of course that can happen because no indicator will always be very, very clear. You know, it is price. We never know what is going to happen, and it takes practice. It takes practice. So if we look at the CVD divergences, then in the previous update I mentioned we had bearish divergences over here. Lower highs on the price, higher highs on the yellow line, but these played out, right? The moment this low got taken, these are back to neutral. These don't count anymore, right? So then you move to the downside, all good, all fine. Then eventually we had this like move towards the upside, right? And we started to see over here some bullish divergences. Over here we can see a higher low in price but a lower low on the blue CVD. Bullish divergence, target taking this high. Another one, higher low on price but then in yellow, lower high on the CVD. Bullish divergence, target this high. Now both of these highs got taken, so both of these bullish CVDs have played out. If you traded these, very, very nice, congratulations, and hopefully you took some nice profits or closed the trade at these targets. Now if we then look at these highs over here, right? We saw bullish divergence going into a potential bearish divergence. And that's not like usually something I necessarily enjoy seeing. I prefer to have bearish divergences without seeing bullish divergences, right? In this scenario then, because price moved towards the upside, you can see that the yellow line over here is much higher than the yellow line over here. So we had a lower high on price, higher high on the yellow CVD, which is a bearish divergence, even though we also had then bullish divergence. So it's not really something I like to see per se. Price then moved to the downside, but if we now look at what is happening over here is, so the bearish divergence target, by the way, is taking this low at 27.5k. That is the target of this bearish divergence. But price moved to the downside, and then what is happening is that now you have a higher low on price as it stands now at the moment of recording, a higher low on price, but then on blue, a lower low on the CVD over here, as well as on yellow, if you compare it at least with this low over here, there is also a lower low between this, or a higher low on price, and then a lower low over here on the CVD. So now we also have some bullish CVD. So it's very, very confusing, and it's very simple. If price is confusing, if price is not giving you what you are looking for, you just stay out of the market, right? We are not YOLOing, FOMOing, we're not missing anything. There's always going to be another trade in the market. And if you missed the setup that I gave, like I think like 2 videos ago around here, where I then said, well, there is a potential short setup, well, all good, all fine. You know, you need your own strategy, your own plan. In then the previous update, I said, well, I see some bullish divergences. So, you know, I'm not very confident in a potential short. This is, you know, this is me talking to myself as well in these videos, right? It also helps me with my trading and my setups that, hey, I see some bullish divergences. Even though I'm potentially looking for a short scenario, it doesn't give me a lot of confidence to go short because of the bullish divergences. So, you know, I removed the trading setup again because, yeah, it doesn't really fit my plan. And I have a personal developed trading plan where I'm looking for a couple of entry requirements before I even consider entering the trade. And Elliott Waves is for me a direction, like directional bias, but it's not my trade entry, let's say. So in this scenario, if there is confusion for yourself, or your strategy or your plan is not 100% valid, then just stay out of the market. You know, whatever happens, yeah, maybe the price is going down and, you know, missing the move. What, you know, who cares? There's always going to be a next trade. Follow your plan, stay patient, stay disciplined, and that is how, from a mindset point of view, you can become a profitable trader, because running after price is not what you want to do. You want price to come to you and your setup, whatever you are looking for. So in this scenario, yeah, price at the moment moving to the downside. We can see that volume is increasing while price is moving to the downside. We also have a little bit of a double bottom over here. We have a bit of a double top. Who knows what's going to happen, right? We have the bullish scenario, we have the bearish scenario. We trade probabilities, and you just stick to your plan. Very, very important to have a plan. Then the news. I do want to at least highlight it today once, where at Friday we have some high impact news. You can see the red flags over here. Friday, 2:30 p.m. Central East European time. Make sure to check your own time zone. We have high impact news. So Friday might be a very volatile day, and maybe on the Friday we can get a very, very clear direction towards either up or down. Now, I definitely do not expect this range to hold all the way until Friday. I believe, you know, we're going to take the highs or the lows or the highs at least once in that time. I may hope, else it's going to be a very boring week till Friday. But let's wait and see what happens on that Friday, right? So at least I hope I gave you a little bit of information as well as a little bit of insight in trading mindset, because in the end, 80% of trading is mindset. You know, just stick to your plan. Now, I hope this video was still helpful or valuable to you. Please check out the most recent educational update I've done about the best trading indicator you can use, in my opinion, which is the CVD. And thanks for watching and subscribing, and I will see you at the next one. Bye-bye.